To the Wealth Academy educational series. I'm Khoo, and in this topic we'll be talking about how do you profit from a declining market. So before I continue, once again, pause the video, read the disclaimer. Once you understand the risks, let's carry on. So why should we learn how to profit from a declining market? Because although the market will go up in the very long term, but in the medium term, markets can go up on uptrends for a couple of years and at the same time go through downtrends that can last for 2 to 3 years. Now, if you want to make money consistently every single year, the way I do it and my students do it, you have to learn how to make money, not just when markets go up. You have to learn to make money when markets go down. So first of all, you have to identify when a market's on a downtrend. And I've talked about this in previous videos. So for example, if you look at the Dow Jones index from 2008 to 2009, it reversed into a downtrend that lasted for about 2 years. And the market crashed by about 55%. So in my previous videos, I've taught you how to use moving averages, specifically the 50 and 150-day moving average. And I said that when the 50 blue line crosses below the 150 green line, like so, that's what we call a downtrend signal. And when you see that cross, the market's on a downtrend. And remember, on a downtrend, you never ever want to hold a stock. You gotta sell, you gotta get out. And you never want to buy on a downtrend, because on a downtrend, the probability is that prices will go lower and lower. Cheap will get cheaper, lower will get lower. So at this point of time, you want to profit from a downtrend. Now, have you ever bought a stock or bid in the market and the market went into a downtrend during a recession and you saw yourself losing so much money? It's really painful, right? Now, if you think about it, where did all the money go? I mean, if you lost $100,000 because the price of the stock went down, the money didn't just disappear. The money went from your account to someone else's account. So as you are losing the money, who's the person making the money? The person who's making the money is the person who is short selling the market. Now, there are many ways to short sell the market. One way is to simply short sell the stocks and buy back at a cheaper price. I'll leave that for another video. Another way is to buy what we call put options using the options market, which is a bit more advanced and sophisticated. But the simplest way to profit as the market collapses so that you are making money while everyone is losing money is by using inverse ETFs. Now remember, what are ETFs? ETFs are exchange traded funds. So usually people buy ETFs because the ETFs track an index that's going up. For example, if you think the Dow Jones is going up on an uptrend, you buy the Dow Jones ETF. And you can buy it through the stock market, through your stockbroker. So every index has an inverse ETF, which goes opposite of the index direction. So in other words, if the Dow Jones is on a downtrend, you want to buy the short Dow 30 ETF. And the symbol is the DOG, called the dog, right? So whenever the Dow Jones goes down, the dog goes up. So once again, if you take a look at the downtrend during the financial crisis, you can see from 2008 to 2009, the market fell by 55%. So the moment you see that downtrend signal, you have to sell your Dow Jones ETF or your shares, and instead you want to buy the DOG short ETF over here. And you can see the opposite is happening, that now it goes into an uptrend. The inverse ETF goes on an uptrend. So you can buy over here when the 50 crosses above the 150, and you can hold it all the way to about $80, giving you a very nice return. Now you can see the 50 crossing below the 150. You wouldn't sell here because the 150 is still sloping up. If you have watched my videos previously on moving averages, yeah. So here's another example. Oil prices, right? Everyone knows that oil prices have plunged from 2014 to 2016. In fact, the downtrend started in 2011. But in those 2 years, oil plunged by 76%. So if you had bought oil using the oil ETF, you would have lost 76% of all your money. But who made your money? People who were shorting oil. like my students, like myself. So how do you do that? Again, once you see the 50 blue line crossing below the 150 green line, that's a downtrend signal. So you buy the inverse oil ETF, and that's called the DNO, right? You can see United Short Oil ETF. And when oil is going down, you can see this ETF is going up. So over here, you would have bought the oil short ETF at about $30 when a 50 and 150 signal in an uptrend. You could have held it all the way to $110, making a killing in the markets, right? Gold. I made a lot of money on gold as well. So did my students, right? So gold was on an uptrend for about 12 years. Then in 2013, gold started going into a downtrend. Remember, what goes up must go down. You have to make money both ways. And over here in 2013 January, you can see gold started reversing into a downtrend with the 50 crossing below the 150, and it's sloping down over here, sloping over here. So over here, again, if you had held gold, you should have sold all your gold, all right, and gotten out before the 45% plunge, and instead over this period, you could have bought what we call the GLL, which is the ProShares Ultra Short ETF in gold. So again, the more gold goes down, the more this ETF goes up. You could have bought it somewhere around there, and you may have sold it over here when the 50 crossed below the 150 sloping down. You could have bought it back somewhere over here, and now it's at about 105. So I want you to understand something. There's no such thing as a good or bad market. There's no such thing as a good or bad stock. Because when a market goes up, it's good. If you are long, if you buy low and you sell high, it's good, right? But if the market's going down, it's also good. If you short sell, if you sell high, you buy low, use inverse ETFs. So you profit as long as you follow the dominant trend of the stock price or the market price. So again, how do you determine the direction of the stock price? We do it by studying trends. And that's what I teach in my training programs and what my students do. So that concludes this educational video tutorial. Stay safe, stay profitable in any market. This is Adam Khoo, and if you like, do subscribe to this channel.